And get in one more voice. Nilesh Parikh, Associate Director, Wholesale Capital Markets at Edelweiss Financial Services joins. And Nilesh, thanks for joining in. Good having you. How did you read into the numbers? More importantly, the provisioning that has gone up.
Yeah, so I think, considering that NPLs both on that gross and net NPLs have moved up, clearly seems to suggest that slippages have remained elevated and necessitating higher provisioning. So in a notes to accounts, they've mentioned that about 350 odd crores is because of the investment depreciation. But outside of that, it looks like it is clearly NPL-led provisioning which is spiked. And we still don't have details around the restructured book. So, if that is also increased, then probably the numbers are far worse than what we would have thought.
Nilesh, just wanted your view on the asset quality. Given that we have seen a deterioration this time around, do you think that all of the efforts that the bank is taking to, to reassess the overall balance sheet, that this perhaps is just a one-off in the asset quality?
Consistently over the last couple of quarters, we've seen them get into the consolidation mode. So, but these are all historical, baggage that they were carrying, and that's keeping the numbers elevated. Probably, the impact of this entire consolidation that they've done over the last couple of quarters may hold good for maybe over the next couple of quarters. But in the near term, I think what they're carrying, given the sectoral exposures to iron and steel, which is slightly higher, and power, you're seeing some bit of follow through in terms of NPL numbers for them.
Just one first, a quick reaction from you. I mean, you'll probably give your detailed note later on, but just purely on the basis of these numbers, would you change your call on PNB, and what would be a fair target according to you right now?
So we currently have a new hold rating on the stock, given that there have been challenges on asset quality which has persisted for some more time than we would have envisaged earlier. Our sense is, but what is providing comfort is the valuation currently today at about 0.6, which provides some bit of comfort. So we believe that there's not too much of downside here, and currently our price target is about 660. So we'll probably be evaluating that. But from a rating perspective, I think given that valuations are currently pretty attractive at 0.6, we don't think there's a need to change our rating call on that.
Nilesh, by any count, do you think this is a precursor as to what SBI is also likely to dole out in terms of its earnings next week?
Well, difficult to take a call because we've seen a mixed bag from the state-owned banks. Some banks have reported stabilization in the NPLs. Some have actually showed an improvement, and someone like a PNB has shown a deterioration. So it's difficult to take a call. But overall, our sense is that when you look at pure macros, things have still not stabilized. Difficult. Don't think that we could call it a bottom for SBI also on that count.
Okay, leave it at that. Nilesh, thanks so much for giving us your initial view on PNB. So both of the experts who joined in said that they wouldn't review the rating on PNB. The stock too stable at 3.5% odd. Poonam has spoken.